Good afternoon, everyone, or good morning, or good evening, wherever you are in the world. Hope you're well. It's Wednesday. We're in the middle of the week already. It's the 7th of January. Uh, Key day for me. And the dollar continues to hold its gain. Here, the daily chart, you can see there to the right of me, to the left of me, however you're looking at it, is up for a 10th consecutive day. From this push over 118 on the just before 23rd, we've been down consecutively. I mean, the up days were very minor. The down days were more significant. So the trend, having breached the 20-day moving average here as we started the new year on the second, big volatile day on Monday. We were down again yesterday, significantly closed, bodied candle down, and we're into 116.85, that key resistance area we talked about last week, and the key 38.2, or the first of the key fib levels of this rally of euro dollar from the end of November. So we're into the first key fib levels, target areas for many. It's crossed the Bollinger Band. It's hit the outside of the Bollinger Band yesterday, so some trades will be off. People using this as an indicator, and others will see if this resistance, both at the fib level and the lower Bollinger Band, holds as we go forward. 116.85 for euro dollar. Big day today. Big day today. That's a bit of a mouthful, isn't it? Earlier this morning, we had weaker than expected, quite significantly weaker than expected inflation out of Australia. 3.4% on an annualized basis, the headline number, down from 3.8%. The monthly rate was completely flat as well. That was expected to tick up by 0.1%. That came in at 0.00, completely flat. And the trimmed, i.e., when they filter out some of the more volatile elements of what makes an inflation basket. Different countries have different ways of measuring it. The Aussies and the Canadians use the trimmed mean. That's also come in. That came in the flip side, a bit hotter than expected, and in line as hot as it was last time, 0.3%. And that's a relatively hot number for a monthly number. So there's a bit of a mixed message there from Australia. Reported 9 minutes later than released by source. We regret the error. That's coming from good old Forex factory. God bless them. So that was a bit of a surprise. Core data from the EU this morning it's not updated. For inflation, also a tad weaker than expected, 2.3% from 2.4%, and the headline 2% from interesting, a tick up to 2.1%. So again, it's a bit of a mixed picture, but we're still biased to the downside. Main data coming in a minute, 7 minutes away, is the ADP. Remember, this is the private payroll company, ADP, and reporting their reading of non-farm employment change. Obviously, we get the main government one, the first clean one since the government shut down on Friday, but more on that on Friday. So the ADP, which used to be quite correlated to the non-farm payroll data. So if this was a big beat, traders could expect, or markets could expect, or priced in a big beat for non-farm payroll on Friday. That is no longer the case. This data has been relatively consistent, given the fact, obviously, the government shutdown didn't impact it so much, or didn't impact the actual recording of it, whereas obviously non-farm payroll was all over the place. If we just take off the forecast here, you can see, sorry, this is, let me just scroll this down a bit, because of the, it looks a bit squiffy because of the, I always get this wrong, how to do this. Because of the hiccup, the massive impact of the COVID on jobs. So if I get rid of that, there we are. It's timing it, so it's just right, and you can still see it. Yeah, it's still not great, is it? So if we move that bit, there we are. A bit more readable. Let's move it so it ticks away. There we are. So this is obviously the hoo-ha for the COVID, but you can see it's been relatively stable over 2024, 2023, flipping between positive and negative. We're expecting about 50,000 today. So have a look at that. It's not although it's a red impact, it doesn't really impact the markets that much when we're looking forward to NFP on Friday, particularly since they've recalibrated it. It has got a bit more in sync with non-farm payroll, but it's still a bit squiffy. So look what that number looks like in 4 minutes. Later this afternoon, probably more importantly, is the ISM services number. The services PMI data, remember, is always forward looking. Anything over 50 is expansion, anything under 50 is contraction. We had that weak-ish numbers from Europe yesterday. Only here, they were only medium, aren't they? Not red, so we can't see them, but they were sort of in line with expectations. So watch that at 3 o'clock, 2 hours away. And the JOLTS, remember the JOLTS is the jobs openings. So it's churn in the market. Companies with vacancies that they can't fill, and number of people that are moving from job to job, created by former Treasury Secretary and former head of the Fed in San Francisco, Janet Yellen, when she was there, had much more significance, obviously, when she was head of the Fed, and also Treasury Secretary. Perhaps has less significance now just because of that political overtones. But 7.61 million is expected. So let me just get rid of the Canada. Have a look at what else is going on. The DAX this morning. You know, I'm a big DAX trader. I haven't been trading this morning. I was out running this morning. It's freezing cold here in London again, but the ice has rolled over. So a bit of a better day today. So dollars, yeah, that's the daily time. You can see the hourly time frame here against the euros flattened. Come into this key 1685 support area, and we've gone sideways, waiting for this data. So if we pull this down to the 5 minute, we'll see the reaction to the data coming out in 12 minutes. So we've got a few minutes to quickly run around the other markets. I said DAX has hit all-time highs again this morning. Gold continued up. Crypto has continued to hold up, but we've moved down yesterday under the key, and this morning under the key 92,000 level. So we slumped this morning, rippled over it, and then we're back down under the key 92,000. So it's lost its voo a bit. You can see on the hourly chart we were down. We went to 90,000 range, 91,100 this morning. If we're going to go look at the daily chart, you can see, as we've been saying, we looked like we would take the volume off that. So the rally here from the beginning of the year, big update on Monday. We all got quite excited about over that 92,000 levels. Or were we, as I was saying, looking to buy or a weak buy at 92,000, looking to buy if we went above 95,000. 94 was proved resistance. And yesterday we were down, and we're down again today. And now the key thing is we are currently trading under the $92,000. So perhaps we'll see some, again, consolidation at this, extending the channel we've been in since the big decline from the all-time high here at the beginning of October into our channel here, our sideways channel. So it was our first breakout. It's failed initially, or looks like it's failed initially. Monday down, Tuesday down, Wednesday at the moment. But we are biased to the upside, aren't we? We're at the outside of the Bollinger Band, we're pushing higher. So we'll see. Just keep that monitoring. A weak buy at 92,000. That's still in place. Add more to that position if we go plus 95. But this range is in place. We're out of the, you can see on the stochastics, we're into the overbought area. We're on the outside of the Bollinger Band. Are we going to either move back down here, back down to test 89,000, which is the midline, the 20-day moving average, and then the floor here we saw into the Christmas week at 85,000. That's our range still in place. This is the first breakout, relatively strong over the course of the period, but obviously that's rebalancing of books there on the Monday, the 5th of January, when we would argue. So again, watch that one. Oil, obviously, very much in focus with all the geopolitics that's going on, and the bias remains down, as we said. We've been saying for weeks, if not months. $57 we're back to now. So with that spike to 58, couldn't be held. We're back to 57, and this morning we've been as low as 55.75. So we'll bounce, but if we look at the hourly chart, obviously the news is key. The floor, the expectations perhaps got ahead of ourselves. Trump calling it our oil, the stuff that's under Venezuela. Found support at 56.25, but interestingly, you see the wicks here. I know these are only hourly candles, but they're getting lower. That support we've got here today is lower than the support than we had on the fourth, and that's lower than the support we had on the second, and it's lower than the support we had here through the 31st before before the invasion, basically the kidnapping of Marauder, or bring it to justice of Marauder. Depends how you want to spin it. But anyway, $57 for Brent. The US ADP data should be out now. Let's go back to the euro. See how the euros reacted immediately. Let's bring it down to the 5-minute chart. See what's happening. Well, we buy to the downside. You can see here. We're under the 20 period moving average on the 5 minutes. So see how we react. Let's have a look at the calendar. So ADP coming in. It's coming weaker than expected. It's coming at 41,000. Let me show you that. It's coming at 41,000, so better than obviously last month when we had that surprise decline in payrolls, but not as strong as expected. 8,000. So again, percentage-wise, that's quite a significant miss, isn't it? 41,000 as opposed to 49,000. If we get the similar pattern for non-farm payroll, that'll see. This has been upgraded during the week. This was 59,000. On Monday, it was 62,000 yesterday. I think this is the Reuters poll. The consensus has now gone up to 66,000. So that's ticked up during the week. This might get revised again following the miss for ADP. Obviously, key what the JOLTS number looks like later on before it all goes into the mix of the measuring jobs. And then obviously we've got the weekly claims. Tomorrow we'll be live with you for that as well. So 41,000 for ADP non-farm payroll. I say it's not really market moving event, although it's a red event, as you can see here. The move in the euro has been negligible. The trend remains sort of to the downside here on the 5 minute, as it obviously remains in the higher time frame. If we just click down to the minute chart, see how it's reacted a bit. So 13.15 is when the data came out. So it was an initial spike higher, then it was sold, and now it's coming back. So the euro's ticking up, within 2 minutes of the data coming out. This crossing strategy that was really a first tick would have been, I wouldn't have gotten there. I'd got on that one. So I'd been long using this crossing strategy on the 1 minute. I'd have been in there at 16.83.4 and out half of it out at 16.85.3. A pip and a bit. But that's what happens when you trade in the minute chart. But look at the spread. Spread's hiked up a wee bit on that. So that's why I tend to keep it around about the 2 or the 3 minute charts. When you're doing this manually, obviously 2 minutes can seem like forever. 5 minutes can seem like an absolute lifetime as well. But 5 minutes is my preferred short-term time frame, and it's starting to move up here, but the trend is down. So if we get to the top of the Bollinger Band, we could easily move back down. So weaker jobs has ticked up. The dollar's ticked down a tad, but overall for the day and the trend from that top we saw over here at 118 last just before Christmas, that trend is still set to the downside. So obviously on a daily basis, excuse me, the hourly chart, we went as low as 16.73 this morning, and trades this morning in the European yesterday, wasn't it? I'm talking about 7th today, full. Top this morning has been 17. So 117, big fat resistance, big round number, 117.02 technically there in the week, but you can see here on the hourly chart, the hourly close hasn't closed above 116.98 or 99, so shy of 117. So that's a key and thick resistance, and all top of the Bollinger Band is there stuck on that 117 level. So we are just 13 pips shy of that. So very limited red, very limited reaction to the first big data point of the week following non-farm payroll week. We got JOLTS and services PMI services ISM, PMIs to come shortly. If there's any detail in the, let me just check the ADP website. So, remember last time we were negative 32 goods. This is private. This is the ADP reading. So the detail in here. So goods was -3 compared to -19 last month. This is all thousands of jobs. Services ticked up very significantly. Services growth was the big area. It was plus 44,000 versus a 13,000 decline last month. This is obviously to do with the seasonality and jobs. Small businesses lost 120,000. 6 of the last 7 months have been negative, so another negative month for small businesses. The Russell small cap index is struggling. It's the big cap, big tech companies. Still focused on the AI boom that's really moved the tech stock markets up. Medium businesses, interesting, was a gain of 51,000, and large businesses was a gain of 39,000. Wages for stayers was a bit weaker, 4.4% from 4.5%. And changes, those swapping jobs in the private sector, they were up 6% compared to 6.7%. So there's still some resilience and strength in those that have got jobs. But the issue is that it's falling on small businesses. Again, 120,000 decline, and they're the mom and pop businesses. They're the backbone of the US economy. So the weakness in the jobs market is seen very much there. And those with jobs are doing better than those. Those moving from company to company are doing better than those hanging on in a job. Because theirs went down, whereas changes went up significantly. But again, nothing really moving. I just checked the yield market as well. That's not really moved either. So really, all eyes very much on Friday and 1:30 GMT and the non-farm payroll, the first clean non-farm payroll in a long time, coming out when it's scheduled to come out as well, the first Friday of the month. So watch that again. As I've been speaking, there's been literally virtually imperceptible moves in the euro dollar. So we're at 116.86.6 as the data came out. We went down to 116.82.5 and 116.88. So absolutely no move at all there on the currency of the euro in particular. Let's have a look at the see. As I said, the DAX has hit all-time highs here in Europe this morning. 25,000. We're still holding 25,000. The new all-time highs this morning at 25,090. The FTSE similarly, the FTSE conversely, I should say, like we saw yesterday at the open, was higher yesterday, new all-time highs yesterday for the FTSE at 10,157, and giving back some profits since the US Open yesterday. So we declined in. Sorry, that was the close one more time, not the open. That's one note. Yeah, so we took some profits off the table, obviously got to all-time highs, and we've declined a bit more today, but we are still, as you can see here, over that key 10,000 level here in the FTSE. So UK stocks in demand as they were for the first time in a long time last year, up 20% the FTSE last year compared to 3% for 2024. So holding 10,000. How long that lasts for, we shall see as we move forward. The US stock markets yesterday all closed in positive territory. The Dow was up 1% again, nearly 500-point gain, leading the pack. Again, the wider Nasdaq was up 151 points, 0.65 of 1%, and the S&P was up 42 points, 0.62 of 1%, and big. The futures this morning rolled over a little bit, but was hanging on to yesterday's gains. Basically, this is the S&P, and it's currently trading on derivatives package at 6942 for the S&P 500, and again all-time highs here yesterday and this morning in the futures. Looking it's up to the daily, so I'm talking about the daily. Looking at this messy, but as you can see, we're still in our channel zone, but yesterday's strong move took us at the top of the previous two legs. So this is our leg down and the leg up. Sorry, the last proper leg down from the middle of December. The leg up we saw at the end of December, and then this minor glitch down over the week volumes of the Christmas New Year week, and then we're back up. So we're breaking out of the two ranges we had, and that's the last big leg down. So this takes us back to the end of October where we hit this previous all-time high. So this is looking relatively positive on yesterday. So we started the new year 3 positive sessions following the big sell-off on the final day of the year. But again, that's more to do with the technicalities that we've beaten the final day, some tax loss adjusting, some profit taking for the year, final profit taking bagged and everything. So we reinvested for the first quarter and for the new year over the last few days, and that continued on Tuesday and on Monday and Tuesday. And looks like it's continuing to, although we're down a tad today, but we did close at all-time highs again yesterday for the S&P. The Dow, as I say, was the biggest mover, up a whole 1%. And there's two big, strong candles. So the Dow outperforming new all-time highs again, and eyes now that we're at 49,500. Obviously, 500 points. 50,000 is the next line. Big, big fat line in the sand. As you can see, this last leg that we set up. Remember, we set these up towards the end of December. Our extended fib level took us to that key 50,000 level of this last significant leg down that we had here. So obviously that was an up leg, but it was a minor retrace. So 1, 2, 3, 4. Crashing, will it take us to 50,000? We shall see. But all of this time, all this sell-off here from the middle of November, the 20 period moving averages held, and we've been in the upper half of the Bollinger Band, so stocks still in demand. Obviously, oil services companies benefiting significantly and lifting the down on the back of all the noise around what's going on in Venezuela. Sentiment's generally better with the positive meeting in slipping into geopolitics, slipping with the benefits of the outcome of the positive spin from the group of European leaders that met yesterday with regard to Ukraine, agreeing to have troops on the ground in Ukraine, security guarantees from the Americans. That's still, obviously, the details of that are still to be ironed out. We're meeting again today, Whitcomb and Jared Kushner. The boss's son-in-law, keeping an eye on things, looking at things through different eyes, through Mr. Whitcock's eyes, for the president to report back to. So, sentiment raised on that. Obviously, the worry, obviously, on the back of what's happened in Venezuela and how the Russians and the Chinese in particular are going to react, or don't need to react, really. Obviously, is the issue, and Europe sort of jumping to push things through for Ukraine. All-time highs for the Dow, S&P we had a look at, and the Nasdaq 100. Remember, this is the Nasdaq 100 we offer here, the narrower, the wider Nasdaq. So it's yet to get back to the all-time highs from the beginning and end of October, beginning of November that we saw at 26,200. But again, the legs are the same. We are now, with strong day yesterday, we're now up into the upper half of the Bollinger Band. We talked about this yesterday, didn't we? The wave structure, the M shape of the Bollinger Band, still very much going sideways. So again, the first break will be this leg here, then the top of the Bollinger Band, and then the first extended fib level at 26,500. So 3 key up level targets this week: 25,795 or 25,800. We said yesterday, 25,980, and then 25,500. So the breach of 25,000 is held. We're holding 25,500 as well at the moment. So the next target is this little cluster we got here at the beginning of December at 25,800 on the Nasdaq to the upside. All those indications of that moving down, but that might hold and move up. But we shall see. But typically, these first few days of January can be quite positive. So, as we get into next week, we'll be looking forward to the inflation data. The Fed decision will be a week closer. The earnings season will be starting to report, and that's the key thing for certain for stock markets moving forward here. These very, very highly rated tech stocks, are they justified with the actual money they're generating, the earnings, the expectations from Wall Street? So Tesla yesterday, as an example, lost 4 and a bit percent. The move up we'd seen for Chevron and the other oil companies yesterday was mooted. We had a fall, I mean, rally significantly. Chevron was down 4.46%. ExxonMobil was down 3.45%. So lots of volatility around that. The immediate not enthusiasm for the opportunities in Venezuela. The reality of the state of the infrastructure and the long-term investment, and whether any CEOs will be prepared to actually, start investing in that country. What sort of guarantees will they get from the government, both governments, the US and Venezuela? Breaking news here: US forces attempt to seize Putin's runaway tanker heading towards the UK. Interesting. Yeah, and Farage. Sorry, Farage. Greenland, the end of NATO potentially. Trump, yeah, everybody's saying that. Danish ministers, UK ministers saying that if Trump goes that. But what will NATO do? What would the UK do? What would Europe do if he decided to do that? You know, and many, well, not many. Obviously, it's a small nation. Part of Denmark. There's obviously an element of probably a few, probably count my hand. I don't know. People that want independence for Greenland, I would guess. I know it's Bjork. I don't know if you know Bjork, a singer from Iceland. I was talking about the Greenlanders asking for national independence and their own nation state, but obviously very, very huge island, massive amount of resources, key strategic location both for if the US was going to attack Russia, Russia was going to attack the US or Europe. The geography is key, top of the earth, top of the world, and you need to look at it as a geographer and a geologist. The maps, not necessarily the ones you see in school atlases, but key seaways as well. As global warming opens up those seaways, trade routes are opening up. Yeah, Russia's already made big moves. Obviously, you've got lots of their own territory in the Arctic Circle, as of Canada, and Mr. Trump wants to get a slice of it clearly, but whether that'll go through, how far he will get with that changing and taking full control is a big question mark. But never rule anything out. It can get very personal. this president we have. So anyway, Nasdaq, stock markets, S&P, Dow all up. The DAX at all-time highs today. The FTSE lagging, having rolled over. Nasdaq yet to get to all-time highs, but the Dow and the S&P doing so. But DAX doing really nicely this week to start as it finished 2025. Gold. Is anybody asking for an check who's here? Right, sorry. Killian, good afternoon to you. Good afternoon. We're in a contraction. I'm going to be wild on Friday, yeah, but the DAX is really weak on those highs. Yeah, absolutely. Dow strong, absolutely couldn't agree with that. Most currencies at all-time highs. Gold looking, yes, have a look at gold. Sorry, I've just seen your comments here. They were 10 minutes ago, so I apologise, my friend. Let's just have a look at gold as your last comment. So, metals, here we are. Gold, 444, all the fours today. So remember the big shakeout we saw on the 29th, end of that massive rally, but we've bought it back, haven't we? Again, if we do a little, my favourite retrace tools. So that extended that shakeout we saw the 29th and even into the, let's leave that there. At the end of the year, so we went as low as 4,273. Our all-time high was this 4,550, 4,550, and look what we've done. We've recouped through the key. I think we did this yesterday, didn't we? Through the key level, the key golden ratio, the 61.8 on Monday with that big uptick there. We started the new trading week. We followed through yesterday through the 78.6 level. I don't really, but I know many do. Stalled down. We're down again today, but we're still stuck. Oh, we're not stuck, but we've stalled currently at 444, right on the 61.8 of the shakeout that we had at the end of the year. The profit taking is all over. People are back in, and a bit more profit taking perhaps today. Who knows? But and that's really presumably the dollar strength story that's pulled us down today. Killian, is how I'm reading that. I mean, it doesn't matter what I think or how we read it. It's what's happening, isn't it? We are down today. If you're trading this on a short-term basis, the trend is down on the gold market today, and there we go. So under the um, into the under half of the Bollinger Band here, using this strategy. At 1 o'clock, a big candle. We touched the outside of the Bollinger Band here at 2 o'clock in the afternoon. We didn't cross low until, in fact, we'd have got it. We'd have got short there at that point there on this hourly chart at midnight as we closed out yesterday at 4492. First target would have been 4474, and second target was hit this morning, 5 o'clock at 4444. And we're back to 4444 now. So there we go. Nice clean move. Midline, touch the out of the Bollinger Band, midline of the Bollinger Band, outside of the Bollinger Band. Another touch here. We had a bit of a cross here. It's a weak rally. We've missed the midline, and we've gone back down. So we definitely moving low, or not definitely moving low. That immediate move up was rejected. The rally to move it higher is even more difficult now, 4470, and we're down. But there's that fib level. We're smack right bang on it. If you zoom it over, there's the 61.8 of this big leg down. Also, I told you so. But, that's one of my big foils. I told you so. I had to really get over that as a trader. My big headedness again coming out. So, what can I say? It's just the way I'm made. So gold, you're right. Yes, Killian. What about oil inventory releases in the Venezuela situation? Exactly. The whole oil thing, Killian. It's a long-term investment. Yes, obviously the key thing. That's the oil one. The key thing with Venezuela is their reserves. However, there's no point in digging oil up if you can't sell it, or you're not expecting to sell it shortly. How much inventory can you store? That's one of the big problems with the decline in the infrastructure, lack of the investment in the infrastructure, um, particularly from the regime, the new. Remember the nationalisation of Venezuelan oil took place in 1976. Maduro and what's his predecessor called? It's come out of my head. I mean, they've been in charge for a long time. Hideously corrupt. A lot of them say. I don't know personally, but from all accounts. But they were the big socialist government in Latin America, causing lots of grief for their friends in America and Canada, the democracies of the North, and even Mexico for that matter. And getting up to all sorts of shenanigans. Whether it's the narco terrorist that Trump is claiming. We're going to have to see, obviously, evidence of that. Interestingly, I was watching something about his wife. Her arrest is sort of been not ignored, but why have they brought the wife? Well, she's her own political operator as well, in her own right. She's not just the wife of Maduro. She was a very, I was going to say highly regarded, but in their regime, she was a very significant maneuverer and operator as a politician as well. So, hence bringing her in as well. But again, see how the U.S. justice system works and how independent it remains of the man in the White House. But anyway, we'll see how that comes out. So yeah, inventory is key. The issue is where do they store it? There's this issue about them, these sanctioned tankers, the Russians tankers. The issue around Cuba is probably more of a worry geopolitically. How are they going to survive? Is it going to fall down without Venezuelan support? Are the Americans going to push it, wobble it a bit more? What happens there? Diaspora of Cubans in Florida, new big heartland of Trump supporters. So see how it all goes off. Killian, really disappointed I missed the Dow's trade. It's a rare move. Killian, never be disappointed about missing a trade because there's always one coming along. If you've got a strategy, I mean, it's human instinct. I mean, we're all disappointed about missing things. But if you've got a strategy that you know works over time, whether it's 5 minute scalping strategy or a long-term swing trading strategy or investing strategy, you will have ups and downs. And just mark it down. Yes, you missed this, but why did you miss it? Just put it down for next time and always follow uh, your plan, stick to your plan. And when you're losing, when you're on a losing streak, just accept that that's part and parcel of this business, this trading business that we're all in. China is sending out threats. Absolutely, of course they are. US isn't the global policeman. Shouldn't invade a sovereign country. All the things the West have said about Russia invading Ukraine. Many are arguing that's what the US did on Saturday. The administration will say, "Well, no, we've decapitated or taken out the leader of a corrupt regime, but left the regime in place." Interestingly, the lady that actually won the Nobel Peace Prize, the opposition leader in Venezuela, she's not the president, prime minister. President. You might have expected that's what the Americans wanted, but you know, is it a personal thing? The fact that Trump did is the Nobel Peace Prize. Remember what he did on the 10th of October? Let's bring this up to the Daily Chart. He threw his troops out the cot again. I don't know why the 10th of October is on here. It probably tell you about the big candle there it is. It's a big town candle. He threatened more tariffs on China in a paddy. The fact he didn't get the where's it gone? There we go. The fact that he didn't get the Nobel Peace Prize, that's my very flippant take of it. But it had a big a continued impact on this downtrend, didn't it? Leg lower is rebought back, but we're lower than it was on that day, 10th of October, when we went into. I'm just using WTI as an example. We're ahead of any invasion of Venezuela. So, yeah, I mean, he's very transactional, isn't he? And it's a sort of personality cult with Trump. So, yeah, never rule anything out or rule anything in. The thing about the Chinese and even Putin to an extent, remember, Putin's been in power since 2000, since 1999. It's 2026 now. The Chinese have always think in long term. They have 25-year economic plans and social plans and political plans. Not the 4 and 5 year terms the Western prime ministers and presidents have. Trump's obviously been around for 12 years now, given that he didn't get re-elected in 2020. So perhaps he's been kicking around longer than perhaps many of us would have liked. He's still here, and it's obviously his second term. This is how he's going to be remembered by history. So this move could be very, very significant. This move into a sovereign state, taking out what he calls a narco terrorist. Anyway, how we spin it, isn't it? Killian, I was scared the Dow yesterday started really strong. I didn't know where to place stops. They had to be far ended up walking away. There's nothing wrong with that. You don't have to trade every day. The art of good trading is knowing yourself principally. First and foremost, the art of good trading, let me just say this again very slowly. The art of good trading is knowing yourself first and foremost. And walking away or sitting on your hands or sitting on your thumbs, as I said the other day, and not trading is part of trading. So walking away, closing the laptop, switching off the mobile phone, switching off your charts, switching off the screens, all of that is part of your trading day-to-day mentality and day-to-day operation. So if it isn't clear, if you can't see price action, if if it's just going against you, was it yesterday? Did you say the Dow? What were you saying? So yesterday, I mean, look at the daily candle now. Sorry, yesterday's daily candle, big, strong one. Was it the fact that we'd broken to all-time highs, and you think it's too high, it's got to come down? Is that what you mean? That was the issue. Ended up walking. Yeah. So if you were thinking this was going to top out, let's just go down. See what you mean. So that was yesterday. that was when was that? Was the 5th. So yesterday was sort of here. So yeah, so what were you expecting this to retrace from this big rally up? And it didn't happen. So you see what happened here is clearly we ran out of steam there. That's 6 o'clock. That's the close of Europe, 6 o'clock my time. See how little that candle is compared to the previous action we'd seen from the US Open. So we opened strongly and we followed through, and then we've petered out, in Asia. And even now, as we're still not open. Remember, it's only 1:45 here. The cash market in the US doesn't open for another 45 minutes. So futures are still strong. So if it was just one of those days, it's one of those. But make sure you've written it down, Killian. If it was a big frustrating day, write it down. It's only the second or third trading day, second or third full trading day of the new year anyway. This real placing of risk by the big players, the volume coming back, doesn't all happen at once on the first day. It gets fed back in from taking their profits and banking their profits at the end of the year. So it's getting dropped in this week, obviously, with data. So the Dow's outperformed the last couple of days. So it may be stalling today, maybe a day of give backs and profit being seen, but three really strong uh, days to start the new year from the Dow. So, a bit of a surprise, the strength of that move. If we compare it to the Nasdaq, strong as well, but we were down on the second. And then the S&P, most important, steady away, a bit more of a midline. There you go. You see the significance of the S&P. The other thing with the Dow as well, Killian, remember, it's only 30 mostly industrialized companies, so they've benefited significantly. The oil service companies like Halliburton and related to that stock market, and some defence stocks from the incidents of the weekend. So you can see there's a really good example of the Dow for once, outperforming, and the biggest, widest measure of the US economy, the S&P 500, strong week so far, but medium of the two. Yeah, let's do it again. So there's the Nasdaq, the one that's led it. Strong day. Tuesday, Monday, Tuesday, Friday. When we started the new year, was a down day. Okay, let's do that again. S&P Friday was an up day, but still, not much movement. Monday, Tuesday, up days, and we're flat today. The Dow, see that? Relative terms, bigger moves, positive Monday, Tuesday, Friday, Monday, Tuesday, and now up and flattening out Wednesday. So we're losing a bit of steam. Obviously, just waiting for the jobs date to fall, is what we'd say, to be honest. But yeah, nothing wrong with walking away, my friend. Yeah, Trump really likes to. Yeah, he's just, he's egotistical. Loves the sound of his own voice. I think, like me. Trump really likes to play on the edge, never expect a safe decision. No, and it'll flip. I mean, that's the thing. What something is heard in the morning, it could change later in the afternoon. And obviously, I don't want to say this, but he's getting on again, isn't he? There's lots of rumours about his health and his confidence. I mean, he did look really tired on Saturday and in the press conference. But he's been up for New Year and on view all the time, and sort of fuss about his hand and the aspirins he's taken and all the rest of it. Things start going wrong when you get older, and he brings pressure on himself. And if the character that he is, he takes things very personal, and the little story about Marauder dancing got under Trump's skin apparently. So, but look, there's your Dow, Killian. That's still a very strong trend. There on the daily time frame, we'll zoom that in a bit more. Stay along that. Is what that's saying. Big support these 20 days. There we are to the upside. So it's 10 to 2, still an hour to go before the JOLTS and the ISM services. I'll leave you for now, and we'll have a look at all of that there. So let's just go back to see if there's been any. I can't imagine there's been any move for the euro. All the forex markets. No, the term is. It's interesting to see where we go from here now for euro dollar. Now we've had the big 10-day move down. Are we going to find that support at this level, and then this next level here, which takes to 1650? Let's see what lot more we're going to start push back up through 17 to 18 as we go. What are the implications for what the Europeans have agreed with this Trump on the ground, this troops on the ground in Ukraine? But certainly the sentiment swirling around that seems relatively positive. The incident in Venezuela is now slipping off the headlines. Maduro, we've had that big up day. We had sort of big down day for Chevron and Exxon yesterday. Given the long-term requirements for the infrastructure in Venezuela, do they actually want to go in and get that oil? Is it going to be a joint venture with the Venezuelan government? But it's not a new Venezuelan government; it's the old regime still. Just taking the head man away. It's very strange. But anyway. So dollar still holding up. So let's just run through the majors again. 156.38 is the yen trading currently today. So again, consolidation at highs here on the daily time frame. Sideways action again, 10, 12 days. Top, you can see through our first zone here at this 157 top and the 156 floor here. So we're still in that those blobs we put on a couple of weeks ago, didn't we? Having had that big rally to 157.50. Narrow range on dollar yen. What can the Japanese do to stimulate their economy? They haven't tried before. And will it work this time? It hasn't worked for the last 30 odd years. But big fiscal spending for the new prime minister. All hands going forward at the moment. Dollar yen pulling each other sideways as the dollar improves against other currencies. That's a slight sideways against the yen. The Canadian dollar 137, 138 is still. We've slipped under this morning, but so the rally for the dollar's cooled a tad, but we still hold 138. Top of the Bollinger Band now is our first cluster area at 138.50 is the first resistance. And I'm not sure why that. Oh, that's 139, isn't it? Yeah, 139, the next upside. And for dollar yen, but it looks like we're stalling before that at 138.25, and 138 is mid 20-day moving average at 137.40. So just above what I think line is there, but there we are. Aussie 67.40 this morning, again holding its bid and pushing to new highs, recent highs. So Aussie this morning went to 67.65 from the better than expected inflation data, an area we haven't been since the 6th of October and the some of the fallout from tariff expectations. So 67.66 was played in today. So Aussie still holding its bid against most currencies as well. Cable is back under 135 today. Down day yesterday, we went to 135.40 on Monday yesterday, and we're under 135 at the moment. Again, sort of consolidating at highs with the big support, and the 20-day moving average there at 134.50. And so what's that range there for sterling going forward? And Kiwi 57.60, so we're under dot 15.8 for the Kiwi. Key resistance, as we mentioned before. So moving down here at the end of the year, and we've moved back, but we can't break out of that range so far in January for the Kiwi. So really all eyes data, key data later this afternoon. Hello, hello, Mr. Market. Key data still this afternoon, the services PMIs and the JOLTS opening, the churn in the market is a real measure. Jobs are up 7.61 million, a slip of 500,000 from this reading. 52.2, a slip in services PMIs from 52.6. Um, Tomorrow, the weekly claims, 200, 100, went under 200,000 last week. I forgot to mention that. We weren't around for that last week. That's suggesting real still strength in the US jobs market, despite all this shakeout, despite all this ICE activity and the strimming out of the cash workers, the gig economy. So we'll see that more tomorrow. Inflation from China first thing on Friday, and then uh, non-farm payrolls, unemployment rate of 4.5%. Kashkari, day before yesterday, talked about a potential spike in that, perhaps as early as Friday. We'll see. This, I said, the employment, as I said earlier, it was 59,000, the consensus here on Forex Factory on Monday. That's 62 yesterday, 66 today. I don't know if it's been revised. I think it has since the ADP came out. No, it hasn't. ADP, remember, missing at 41,000 compared to 49,000 last time. But it's back in expansion mode from the surprise contraction we got last month. The negative ones. I don't think you can't see it. Um, the contraction we saw last month. Yeah, there's the contraction last month. It's negative, the last 6 months. Um, ADP has been negative, but you can see that it's declining, the fork and stuff. But it was bounced positive again this month, but it's been zigzagging for the last 6 or 7 months as the decline started from spring last year. So, and the jobs market again that's still showing signs of perhaps a floor resilience potentially, but see what the clean non-farm payroll, the detail within it, the U6 unemployment level, how wide is the remember it's a wider measure, so how is that going to tick up as well, or is it ticking down? And see what that looks like. The participation rate, the weeks worked, all of that detail is key on Friday, and then we finish off the week with the key sentiment indicators out of the University of Michigan as well. So some key data to come over the next 72 hours. So kicking off in a little over an hour with the ISM service and the JOLTS opening. So watch that later on today, my friend. So take care, be good. Any questions about what we do here at the Prop Trade? Obviously, get on to our Discord group. Discord's great. It's instant messaging, basically, for so Toby's on the keyboard at the moment. Toby, Christian, Katzen, Thompson, great team of support analysts for you. So any questions you have, stick it on there. It's me here. Any videos you want doing, any explanations you want doing, we're here to help you, my friends. We want you to be successful. And as Killian just said here, the dollar is trying to gain ground against the major currency pairs. Exactly, that's what we've shown, Killian. We've got a 10, 12 day rally for the dollar. Is it going to hold? Have we set a floor in the dollar? The 20th of, or whenever is it, 28th, 29th, Fed announced their next rate statement and first announcements for 2026. Growing chorus that they won't be doing much in January, and a growing chorus, and maybe not be doing that much in 2026 as it transpires. So anyway, we shall see. We shall see. Just on my trades, I've only got one live trade at the moment. It's a pound against the dollar. It's still open. I think he closed it last night. Left it open. I had some triggers on the Aussie pairs. I didn't take them because of the CPI. I'd have been actually in the money on those. But anyway, as is, it didn't happen. We had two losers yesterday. And so we're actually down for the week, aren't we, at the moment? I think, yeah, we were down 0.75 at one point on Monday, and Tuesday we closed down 20, whatever that is, 23.8 points. So we're down for the week at the moment. But that is trading, not many trades, so, but more tonight potentially. Obviously, I will post them on here if anything comes in tonight. So take care, keep in touch. Thanks for your contribution, Ian. I do appreciate it. Anybody else? Don't be shy. There's lots of you here. I can see you all. Lots of other people here. But don't type in the box. It's fair enough. It's up to you guys. All right. Take care. See you tomorrow for the weekly claims same time tomorrow at 1. Well, 15 minutes later, 1:15 tomorrow, my time, GMT. So be good, be safe, and be kind to one another.